Good, everybody. Still here. Daily Market Pulse for Wednesday, June 18th, 2014. So stocks rise, and all this in a high volatile day following the Fed news, and so it's up in higher volume. Uptrend continues. Uh, Markets essentially are looking to break different levels here at this point. There is the Dow Jones. It was a big, huge move. You see how it dropped early on. There was a lower shadow. You'll see lower shadows on just about every market today prior to the announcement, and then boom, everything took off. So now there's still a peak to break out of and from. Everything looks good and strong otherwise. But there's still that last pivot to break from. Same thing on the S&P. It's actually just, well, maybe by the end of the day it finally did. Let's see here. The high 1955.55. Yeah, the close here was 1956. So it actually closed above the previous high. So it actually, I don't want to call it a breakout because it's not enough, but certainly it's right there. It's just right at resistance. Room to the 1618, 1973, and of course 2000 ultimately on the upside. Nasdaq is very similar. It broke out already above 43.50. Now looking for 43.75 and higher. That looks good as well. So Nasdaq finally caught up and beyond as well. TSX is next. Continues on up. No challenges there. Barely pulled back. Didn't even barely tag. Didn't even touch the 8 moving average on the way up. So no retracement of any kind. So it was just as strong as could be. Should have just followed the TSX of all things. Zoom. Dollar, U.S. dollar, Canadian dollar. The U.S. dollar has come back to that support area. Now it's kind of like a descending triangle at this point. Support across 108.35, and all the highs are coming down. So looking like downside pressure, even though it's oversold. It's now or never essentially for the U.S. dollar, Canadian dollar to either pop or drop. There is the euro popping relatively to the US, and that's come up. That's as expected into the 20. Now we're looking for higher. It's right at the resistance now, 136. That was where we were looking. It's got to get through 136, and it's 136.50, then 137 in that order. Treasuries bounced as well, oddly. Still range bound, however, below 137, but essentially below 136. And then above 135. So it's in a dollar range currently, 135 to 136 in an overall longer term uptrend, as you can see, but it's dicey. Below a declining 20, above a rising 50, which is odd. Japanese yen holding ground here as well, looking still bullish on the long term, it appears. Gold also. Gold and silver both have bounced back up toward, in this case, 1280. Retraced a little bit, giving us a little bit of a spinning top doji formation, but still looks fine overall and kind of on the bullish side. Needs to clear and cross 1280 ultimately. Silver looks even stronger, having come back to the 50, tagging yesterday. And then, of course, today it's not showing yet, but essentially it looks a lot like gold did a minute ago. Not much different there. I'm just going to move on to crude at this point. We know that it had a spinning top doji, or essentially a high wave doji, the last previous days, Friday, Monday. Yesterday dropped. And from that, we were expecting a measured move back toward 105 to 104.50, and that's well on its way. It's holding at the 8 moving average and at the midpoint of that very large green candle. So that's support for the time being, and that's why it's not quite giving itself up. But below this level of 105.50, you are looking at 105 to 104.50. Up to a dollar move from here, I believe. And if we go straight to small caps, the IWM ETF proxy, another move higher, breaking out above 117.50 and 117.75 now. Measured move also looking all the way to 121 on the upside, so that's looking good and strong yet. The VIX absolutely collapsing the last 2 days, particularly even today with a falling window right back to 1060 in this case. The low before was 1073. The low today was 1058. So that's a new low that we have not seen, I don't think, ever. Seems like that I can ever recall. So it's kind of interesting to see it way down here.